Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Thank you guys for the retweets. Really appreciate that. I'm going to go ahead and get started with the analysis of all the major currencies as we normally do. If this is your first time to the Morning Edge, welcome, or if this is one of your first times to the Morning Edge, thanks for being here. We do this every friggin' day, and we've been doing it most every day for the last 14 years. So glad you all are here. Okay, so let's take a look at the euro dollar, and I mean this. I might take a step back for a second, and I'm gonna delete a lot of this stuff, and we're gonna redraw it, especially the fibs here, because I want you to have a good understanding where we're at, what we're doing. Okay, so first and foremost, we had a triangle, and you see the euro dollar was in a nice triangle. We broke to the downside, and right now we're holding support. Okay, so you think about what had happened last week. So this is following the CPI data that we got on Friday. If you guys don't recall, the euro dollar fell. We came back, retested the underside of the trend line. We retested previous support, and notice where the euro's at right now. I mean, we got a little spike high. What was that? Today's Wednesday, so it was yesterday in European trade. So a little more than 24 hours ago, we spiked up beyond 112. I think Nick was like, yeah, I shorted the euro above 112. Man, if you guys got a position off above 112, that's really the position that you want ahead of the Fed. Okay, look, the Fed may not and probably will not do anything today. All right, chances are that they're not going to. Now, I still think that the chances of a rate hike are higher than the market expects at this point. But personally, I don't think they're going to do anything. I really don't. But they might put in a real hawkish slant that, obviously leaves everybody believes that the Fed's going to, not raise rates, leave the door wide open for the end of this year. No one believes they're going to raise in November because of the election, and more than likely it's going to be in December, because that's what they did last year. They raised in December. There is an outside chance, in my opinion, there's an outside chance that they'll raise rates from a credibility standpoint. Look, you go back to December of last year, or the end of last year. Everybody was pricing in 2 to 4 rate hikes this year, and the Fed is you've heard me say this every Fed meeting for the last several meetings. The Fed is slowly losing credibility, and if there's one thing that the Fed really cherishes more than anything, is their credibility, because the thing that I think most people forget is central banks, their most valuable tool is their words. Okay, their words. Their words are their most valuable asset and their policy tool that they have available to them, because what they say is what matters, because it shapes expectations. When you lose that credibility, you lose the ability to have an effectiveness in the market. When you say, hey, we're going to be tightening this year, when you say, with your dot plots and every other, you march the Fed around and parade them around, all the different Fed governors like a bunch of buffoons, and you let the market believe that there is going to be some sort of action this year, and you've been doing that, consistently throughout the course of the year, and yet you fail to act. You lose that credibility, and the Fed is, the thing that I think people most underestimate about the Fed is their willingness to uphold their credibility. And if you think about why the Fed raised rates last December, I think that would be the reason why. All right, now that's why I believe that there still is a better chance that they raise rates today than most believe. Okay, that doesn't mean they're going to. I just think that there's a higher chance of that. And if you look at the euro dollar, guys, I mean, the euro dollar, it doesn't act like a currency right now that believes the Fed is going to stay on hold. I mean, you look at the euro, and we're trading below 112. And I have to agree with what Paulie said as far earlier, that the euro is not acting well. It really isn't. It's acting very poorly at this point in time, and we can't even get past a simple resistance. Look at the 4 hour. I mean, we can't even mount a rally above 111.50. What's that say about the weakness of the euro right now? It's extremely weak. Now, again, does that mean the euro is going lower? Not necessarily. I mean, the Fed could, not raise rates, sound kind of dovish, and we could be, trading back at 112, maybe back at 130. But it is overall trading extremely heavy, and I think that is something that we all have to pay very close attention to at this point. All right. Despite the moves that we're seeing in the yen, despite the moves that we're seeing, everywhere else, the euro just acts really poorly. Now we've come out of this. Let's go ahead and take a fib from. We can go from the lows here, but we'll take this last move. Okay. Actually, we'll go all the way from the lows, because that'll be a 50% retracement. Okay, and you can see that this support here is really quite important for the euro, and I think if we remove this, or if we surpass this support here, that opens the door for the trend line support that comes directly below. So I'm going to write down today as support as being 111.25. All right, that's key. Well, actually 110.50 is key, and then 111.25. All right, so you got 111.25 right here, 111.50 that comes in right here, and this is going to be very important, because see, if the euro breaks through that, especially when you have touches here, here, okay. When you got all these touches throughout these lows, if we break this 110.50, I mean, that's going to open up the door for a much deeper correction. I mean, you're talking going back down into the single-digit midget range. That'd be like below 10, right? So this 110.50 is going to be really key. Obviously, if the Fed does something crazy and they raise rates, I mean, we're gonna be trading at 108 probably by 108 going into the end of the week. Again, I think it's a higher chance than the market believes at this point, but I don't think it's a sure thing by any stretch of the means. All right, it's just you have to watch the potential of a breakdown here in the euro dollar. All right, now resistance today is 112. I mean, that's it. 112 is it, or we can actually write down 112.20. For those of you guys that shorted the euro dollar earlier this week, or yesterday when I was asleep in European trade, if you manage to get a trade off above 112, I think that's a great position to be in. I mean, going into the FOMC, I mean, it may trade back up into the 60s ahead of the FOMC, because we might go mid-range. Like I think mid-range is somewhere around here, because usually you end up going mid-range ahead of big events like this. But in the event that we go to mid-range, we're trading back up here to 111.70 or so, I still think that being in between this range is normal. But being short above 112, if you're already short, I mean, you've got a decent opportunity, because for those people that are not short, or those people that are long, they're probably looking to exit somewhere around 112.20. So anyway, 112.20, oops, 112.20 will be resistance. The bias, I mean, we've fluctuated between a range environment and a bearish trend, but I think being in a range environment is pretty much what we're dealing with right now. But the euro is really threatening to go bearish here. I really think it is. We're threatening to go back to being bearish, back to the lower end of this range. All right, let's take a look at the cable. All right, so here's the pound. Now the pound, I'll tell you guys, the pound looks like crap. My longer term view hasn't changed following the Brexit. When you consolidate at 3 decade plus lows, okay, when you consolidate down here at these lows, it's really, really, tough at this point. It's really, really tough to get bullish. I mean, we're sitting here trading at we were trading below 135. We couldn't mount a rally above 135 2 weeks ago, and now here we are trading below 130. Right. Currently, we're trading at a 127% extension. Here, let's get rid of this really quick. We're trading at 127% extension of the move. The move just the end of August, to September, to the highs. We're at 127% extension. You look at the potential, okay, of a move below 129.40. That's going to expose, in my opinion, a move to new trend lows. All right. So this is we're in a situation that if we break, through the 129.40 level, we can expose a move all the way down. You're talking maybe a new trend low, but potentially a move to like 125. All right, and I know most of you don't want to think that way, especially those of you that are along the cable, but move down to 125 has always been in my expectations of what can happen with the pound. Like, we can very easily move to 125 without much of a worry. Okay, so anyway, so support today is 129.50. I think if we break 129 or 129.40, if we break 129.40, the low here is 128. That's 161% extension. So this would be basically a match low right here. That'd be the next stopping point. Should we break 129.40? That would actually also complete, or more than complete, but pretty much complete the the flag pattern. So I'm going to write down 129.40. That is mega support today. Mega support. Okay. Resistance. I think to take the downside pressure off the cable today, we have to take out 131. If you really want to take the downside pressure off the pound, and you want to get the pound back up into the mid 130s, we have to take out 131. And until that happens, I mean, it is just straight up bearish. I mean, you guys know I've been bearish in the range, but we're just, I mean, it's just ultimately extremely bearish while we're below the 131 level, in my opinion. Okay. All right. Let's take a look at the Swissy. So here's the Swissy, and I've contemplated buying the Swissy, and it's one of those things that's like, okay, well, if the dollar breaks, the breakout, in my opinion, is going to be so major. If it breaks out, let's say that the Fed does raise rates. I think the dollar Swiss above 98.50 is going to be huge. Obviously above 99 cents is going to be even bigger. So I think that it's one of those situations that the Swiss continues to make, you know, higher lows, okay? And you can see on a longer term basis, higher lows. We're in this channel that we've been basically confined to all of this year, okay? We have respected, if you go out to the weekly chart, this blue line right here, remember, this is a multi-decade long trend line that we broke back in last year. And really, if we get above 98.50, actually, let me just double check that just to make sure. Here, our analysis really hasn't changed here. 98.50, 98.60. I'll probably have to figure out where that is from a fib standpoint. Because the 88% retracement is 98.58, so I'm just going to say 98.60. If for some reason we break above 98.60, then you know it's going to go higher. I mean, that's just the breakout above here would be massive. I know we've been drawing that, so I just want you to see. Okay, breakout above here would be massive. Now we are approaching support, a couple levels of support which are really coming into place. So you got trend line support that comes in right here. You have the broken triangle trend line that comes in right here. I'm trying to grab it right there. So that all intersects at this 97.40. Okay, so that should offer support for today. Okay, that should offer support for today, and we are in a range. But I'm going to actually put a couple more asterisks here because I think this is extremely important resistance. All right, let's go over to the yen. So the dollar yen has been weakening as I've been doing starting the analysis. We've come down. We hit brief new lows, very volatile. Okay, brief new lows, just enough to trip some stops here on the dollar yen. Get everybody like, oh, and they get all worried and breaks the new lows, and we'll probably end up bouncing back. We might, who knows where the hell we're going to be ahead of the Fed. If you think mid-range, I mean, we could very easily be back up towards 102. This is the triangle, which I think is extremely important right at the moment. You might look at that candle and go, man, that's an ugly daily candle. It is, but it's also very early in the day. Most traders will look at North American closes because that's the end of the calendar day. The day starts in New Zealand, right? So, that's why North American closes and candles are so important in the currency market, in my opinion, because it really marks the end of the day of the full trading day globally. So we still have a lot of day left. Obviously, by the end of today, this candle could be green and right here. By the end of the day, this candle could be really red and down here. So don't get too excited about what we're seeing right at this moment in time. Let's figure out really quick. I want to do a fib from the. Here, I don't know what that's there. Let me get rid of that. From the spike lows back here in August. There's a 618. We can push to 100.50 without much of an issue, which would be the 786 retracement. I'm going to write that down because I think it'd be foolish to write down 101 right now. It would be because we're sitting on it. Although I think there's some support here. Actually, I can write it down. I'll do it like this: 101. Whoops, that's 100.50. And then we got to just take the overnight highs. I mean, that's just all there is to it. This is major resistance, any which way you slice it. Okay. At 102.80. And here's the thing, guys. Last night, overnight, we proved, okay, and we're still in a bearish trend. We're going to be in a bearish trend until we take out this resistance. We proved how important that resistance was. This is a channel that's been in existence all of 2016. You guys know I've been bearish the dollar yen. I shorted at 121 right here the day after the BOJ acted in February or end of January, whatever it was, when the BOJ moved into lower negative territory with rates. I turned around and shorted the dollar yen at 121 that night. We've been riding the dollar yen on the short side for a long time, and you guys know I've been changing my tune here. The thing about the yen is acting it's not correlating with the markets like you would expect, and a lot of that has to do with bonds, and treasuries. So as the bond market is showing some signs of weakness, it's starting to strengthen yields, and as yields go up, we're starting to see the yen act a little funky. So I think the dollar yen is attempting to base here. I really do. Whether it bases or not, or whether we continue to break down, back below 100, it's entirely possible. But at the same time, I think the dollar yen, if we take out 102.80, we have then now taken out this downtrend line, and we are then starting our turn longer term in the dollar yen to be moving higher. And I think that's something that we all have to pay very close attention to. I think that the dollar yen has the potential to really make a turn. And if you guys have been listening in to the Morning Edge or the Lunch Money webinar for the last couple of years, you've heard me say, look, I'm bullish the yen now, but longer term, I am bearish the yen. I'm very bearish the Japanese economy. I'm very bearish the yen longer term. I think, and I say this, every once in a while, and I'll say it again. I think if you buy the dollar yen right now and you close your eyes for a decade or 5 years from now, you're going to be really happy you bought the dollar yen here. I think the dollar yen will probably trade up towards, 130, 150 yen in the next 5 to 10 years. That doesn't mean that we hit a bottom right now. It doesn't mean we can't see 95 before we see that. But I believe that the yen is a very overvalued currency that will have its day, and it'll get destroyed. I don't know if today's the day. Like I said, I wouldn't be surprised to see the dollar yen, whoops, did not want to do that. I would not be surprised to see the dollar yen trade to 95 yen first before that happens. I would not be surprised if we see this first. Okay. But if we make it above let's just call it 103, then I think the dollar yen is now starting its turn earlier than had anticipated. All right. That's why I blogged about it the other day. I mean, for those of you that know me and have been listening to this analysis for the last couple of years, I'm sure it has been a shocker to you for the last couple of weeks as I'm starting to look at the yen and say, I think the yen is actually a little bearish now. That would be a shocker to most people that has been listening in. Especially if you listened to me a month ago and then you're listening to me now, you're probably going, what? I missed that. All right. When we come back, we've got a lot to do. We've actually got the Canadian, Kiwi, Aussie, dollar index, the peso, Swedish krona, Norwegian krona. We got a lot to do. All right. I'll be back in a few moments. Don't go anywhere. All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Actually, the dollar yen did take out the lows. Probably anybody who is long going into Asia, they just got stopped out. These are nice stop runs ahead of the FOMC. That's exactly what this is. Um, yeah, if you got long at like 102, the 102.50s, you probably put your or even the 102 level, overnight in Asian trade, you probably just put your stops below 101. You're getting stopped out right now. That's probably what is happening at the moment. I don't think we're going to reach 100.50, but you never know. You never know. All right, this has brought in some dollar weakness. Let's take a look at the dollar Canadian first and foremost. So the dollar Canadian, we're getting close to that 131.20. 131.20 is a big support here. Okay. And this is going to be very big. I know we've written down 131.20, but horizontal support really comes in at 131.35. But I still think that 131.20 is going to be it. Okay, 1.3120. This would be a really big support. Crude oil has made a nice jump over the last couple of days, which is assisted in the dollar Canadian from rejecting this 102 or 132.50. This is obviously a very, very big resistance for the dollar Canadian, is up here at 132.50, without a doubt. We know it's huge. If here, let me actually take a step back and zoom out a little bit. Let's get rid of this. Okay. Oh yeah. No. You know what? We're going to keep all that. Let me get rid of that. Let's move. We don't really need that right now. Okay. All right, so if you haven't been on the morning edge recently, so I'll just kind of clue you guys in. All right, so we had this big pennant, right? Big pennant. Everybody got extremely bearish the dollar Canadian. What I think most of the market missed, what we were looking at is this. Trend line, multi-year trend line that came in right here that ended up supporting prices as we got down to 127, 128, bounced back, started squeezing, and now we're in a situation where the market might have got caught a little short. Now we're up at resistance. 132.50 is major. We've been noting that for the last couple of days and the last actually week, and we've hit 132.50 or close to a couple of different times. Now obviously we've come back down towards support, but I believe that this 132.50, if broken, is going to be major. Okay, it's going to be major resistance. Now it's kind of difficult as crude oil has been strong, but at the same time, it's still, we're still looking at a cup and handle here that still targets 133 and change. So if we ever break 132.50, 133.20 would be the first target I would expect. Okay. All right. So anyway, keep an eye on the dollar Canadian. I think that dips to 131.20 could be very well supported. 132.50 is obviously a very big resistance. All right, let's take a look at the Kiwi. So the Kiwi has enjoyed a nice bounce with the dollar weakness. We've seen the Kiwi come racing back just over the last couple hours. We've been capped here by the underside of this trend line, which I don't think is going to change. It's not changing. It hasn't changed today. Here, let's get rid of this. It hasn't changed over the last couple of days. We just keep rejecting the same area. So we could make it as high as 73.60 without any issue, and that's only 20 pips away. I think that's going to be big resistance on the way up. 0.736. I can't believe it keeps giving us these looks up here. It's like keeps giving us these looks, right up here. Yesterday I pulled my Kiwi off the table. I pulled it down here yesterday afternoon. I pulled my Kiwi shorts, Aussie shorts, dollar Canadian longs, all off the table. I wouldn't mind shorting the Kiwi again. It's just, it's kind of hard ahead of the FOMC. You gotta you know, you got to look at it and go, God, you know, do I really want that exposure just, you know, ahead of the FOMC? But, you know, for those of you that want to take a pop shot at it, I think a move up to 73, you know, 73.60 might be a good shot. Now, obviously, support is going to be, well, I still think it's going to be right here, because by the time we get down here, if we move lower, like let's say the dollar strengthens and we move lower, it's going to be at the 72.75. So that's going to be major support for today. 72.75. Okay. Oh, this is range, threatening to go bullish. This one is still bearish. And we're bearish while we're below this red trend line right here. Okay. See, we've been in this channel that's been in existence for, you know, the last year. We broke below the trend line. We've just been challenging the underside of it. But while we're below that red line, I still think it's bearish. But it's, you know, it's frustrating. I mean, the Kiwi just keeps, you know, it's holding its head above water. Let's go over to the Aussie. So the Aussie, we are in the middle of the apex of a big freaking triangle. And guess what? Today, we are smack dab in the middle of that stupid triangle. Maybe a little higher, but still. Resistance is 77 cents, support is 74.50, and we are at 76. So we are pretty much right in the middle of this, you know. Could we make further gains here? Yeah, I mean the dollar, I mean you know, obviously the dollar yen's showing some weakness, so you know, we could continue to press higher towards 76.20. That will be the 618. So I'm going to write down 76.20 and then also 77 cents, which I think is going to be major resistance. We are range bound, and support is obvious to me. It's right there. Support is at 75.25. All right, let's take a look at the dollar index. All right, so here's the dollar index. BOJ, you know, did a number on the dollar index. I mean, it you know, spiked us up into resistance here. You know, obviously we came sliding following the BOJ. It impacted the dollar index quite a bit. So I still believe that 96.20 is resistance and support. Hold on, let's do this. You see that little, this move right here? Ah, no, what I wanted. Okay. This is all really big support down here. So 95.60-ish. 95.60. It's going to be key support. Key resistance is 96.20. I know we've been as high as 96.35, but I think really it's still, you know, I'm going to write down 96.25 actually. I know we've been writing down 96.20 the last couple days, but I'm going to just keep it 96.25. Okay, that is resistance, and we are in a range. Okay, we break this 96.25. That's going to expose a move back up into this longer term channel. right? If we can break through here, that exposes a move back up towards 98, 99 in the coming, you know, weeks ahead. All right. The peso. Now, the peso has been extremely strong. Now, and this is like crazy, right? There's been, I mean, people have been trying to stand in front of this thing. People have been, trying to stand in front of this thing for the last, you know, couple of days. And every time you think it's gonna, and I was trying to make a point with one of the traders yesterday. Avi's like, he goes, "Hey, we're breaking hourly support," and I said, "Don't fall for that. Like, we break hourly support, we rip. We break." This is yesterday during the lunch money webinar. I'm like, "We break hourly support, then we rip. We break hourly support, we rip." We broke hourly support yesterday afternoon in the lunch money webinar. I said, don't do it. It's going to rip higher. And we ripped. Okay. Now we're sitting on, this could be a very similar situation. We broke hourly support and we rip higher. All I know right now with the dollar peso, and I don't know if I would do that necessarily today right ahead of the FOMC, but all I know about the dollar peso is while we're above 1950, or you can say 1945 if you want, you can say somewhere like that. While we're above there, you have to be really careful about being on the short side of the dollar peso. This, to me, looks like we can actually rally quite substantially. I know you're like, man, but it's gone so far, it's just, it continues to rise. I mean, this looks like a runaway freight train right now. I know we don't see them that often. We don't see, the market run away like this. But right now, as long as we remain above 1945, things bullish. I mean, the next stop is at 1995, which is, basically the summer's dip, 127% extension. All right, let's take a look at the Norwegian krona. So it's still early, and this thing's really messy. It's a messy pair right now. I mean, we're in this, major triangle, however you want to look at it. That, however. I'm just, I think if I was short the U.S. dollar peso right now, I'd be a little nervous in the idea with the peso that it really hasn't, or peso, with the Norwegian krona that it really hasn't strengthened a whole lot despite the bounce that we've seen in crude. So move back down to 824, 825. That would probably be a lot of support down here. I'm going to write down, let's figure out if that's a fib from the low to high. See, a 38% retracement comes in at 824.50. So I'm going to write down 825 as being support here for the Norwegian krona. Resistance, we're going to write down. We had resistance at 132 written down for the longest time, right? Why did we have 832 as being resistance? I remember it was a resistance for a reason. Maybe it's a 38% retracement. I don't know. Anyway, I don't want to spend a ton of time on this, but I'll write down 833, and we're in a range. All right, let's go over to the Swedish krona. Swedish krona, we're backing off to the breakout point, which is, I hate to write this down, but I think I'm going to have to. I have to write this down. I have to write down 857. I know we're right on it, but for those of you that trade it, I love trading the Swedish krona. I haven't traded in a while, but it's like one of my, when it's moving, it's one of my more favorite currencies to trade. It's just, it's been more of a difficult situation recently. Anyway, resistance, I think we can just mark it up as horizontal resistance right here, right? 786 retracement. So I'm going to write down just 862. If I can just grab that stupid line right there. There we go. 862. And you get, so here, for those of you guys that haven't seen it, so the reason why this is such a big deal, let's go over here. Okay. For those of you that don't know, I mean, you look back a couple of decades in the Swedish krona. This is the massive move in the dollar of the last 2 years, 2.5 years. That was the massive move. We've got a flag consolidation on a weekly chart. So the reason why this is such a big deal, it's like, you know, I really haven't been trading the Swedish krona much. I bought it, if you guys remember, I bought it on when we did the false breakdown in the dollar index back here early this year. You know, remember the dollar index? We pushed below the channel lows, and I turned around. I got long the dollar right down there. I did get long the Swedish krona at that point in time. You know, short Swedish krona, long the dollar Swedish krona. But I haven't really played the dollar Swedish krona a whole lot because it's been just confined. But I'll tell you, if we start breaking higher, this is going to be one of my more favorite currency pairs again. And if you look at a longer term basis on what the potential is here, if the Fed just starts raising rates and, you know, everybody starts looking around and saying every other central bank, everyone is doing more quantitative easing, moving into lower negative rates, blah, 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 the dollar gets a foothold and starts rallying again, this could be massive. Massive. That's why it may not be a big deal right at this moment. Like, I'm looking at the Swedish krona thinking, okay, well, you know, give me something to think about, or give me something to, you know, play with. But as you can see, we're inching our way higher. We're within 1,000 pips of major resistance now in the Swedish krona. Now, 1,000 pips for a Nordic currency is nothing. That's a day's worth of work if it wants to be. All right. So anyway, hopefully you guys have gotten a good idea of what our major levels are today. Remember, this is your first time at the Morning Edge. We do this every single day. Today's just happens to be a little bit bigger day because it's ahead of the FOMC. Those are, write it down, take a picture, whatever you guys do. I know most of you guys take a snapshot of that, and I'm going to take some questions. Actually, for just I'll take like one or two questions, and I'm going to go.